The US dollar just hit a critical breaking point that hasn't been seen since the 2008 financial crisis. But here's the thing. While most people are focused on inflation and interest rates, the real story is much more terrifying. But what I'm about to show you isn't another boring economics lecture about currency fluctuations. Because one legendary market strategist, someone who predicted the 2000 dot-com crash, the 2008 housing meltdown, and the 2020 market collapse, just issued his most urgent warning ever. And it has nothing to do with what the mainstream media is telling you. If you want to protect your wealth from what's coming next, hit that like button and subscribe to Finsight Capital, because what happens to the dollar in the next 12 months will determine your financial future for the next decade. Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund managing $140 billion, doesn't issue warnings lightly. This is the man who's been called the Steve Jobs of investing. His clients include pension funds, sovereign wealth funds, and billionaire families who've trusted him with their fortunes for over 4 decades. When Dalio talks, Wall Street listens. When he issues urgent warnings, markets move. And right now, he's more concerned about the US dollar than he's been in his entire career. Look at this chart. The dollar index has fallen 12% from its 2022 peaks. That might not sound like much, but in currency markets, that's an earthquake. We're talking about the world's reserve currency, the foundation of global finance, showing cracks that could bring down the entire system. Here's what's really happening behind the scenes, and why Dalio is sounding the alarm. Point 1. The debt bomb first. The US national debt just crossed $34 trillion. Let me put that in perspective for you. If you stacked $34 trillion in $100 bills, the pile would reach 23,000 miles into space, almost 3 times the diameter of Earth. But it gets worse. The government is now spending $1 trillion every 100 days. That's $10 billion per day in new debt. Every single day, including weekends and holidays, America borrows $10 billion it doesn't have. Imagine if your family spent like this. You make $60,000 a year, but you're spending $80,000 and putting $20,000 on credit cards annually. How long before the banks stop lending to you? How long before your credit score collapses? Point 2. The foreign exodus. Here's where it gets terrifying. Foreign countries are dumping U.S. Treasuries at the fastest pace since World War II. China has sold $300 billion in U.S. bonds over the past 2 years. Japan, our biggest creditor, has reduced holdings by $150 billion. Picture this. You're at a poker game, and one by one, all the other players start cashing out and leaving the table. What does that tell you about the game? That's exactly what's happening to the dollar. The smart money is heading for the exits. Point 3. The BRICS rebellion. Meanwhile, the BRICS nations, Brazil, Russia, India, China, and South Africa, are building an alternative financial system. They're creating their own currency backed by gold and commodities. Saudi Arabia is already accepting Chinese yuan for oil payments instead of dollars. And there's one country that just made a move so shocking, it could accelerate the dollar's collapse by years. I'll tell you which one in just a moment. But first, you need to understand why this matters to your wallet. Point 4, the inflation deception. The Federal Reserve keeps telling us inflation is under control. Official numbers show 3.2%. But Ray Dalio's calculations paint a different picture. Real inflation, including housing, healthcare, and food, is running closer to 8%. Look at this grocery receipt from 2019 versus the same items today. That $100 shopping trip now costs $147. Your dollar's purchasing power has dropped 32% in just 5 years. But the grocery store is nothing compared to what's about to happen to your savings account. Point 5. The banking crisis. Nobody talks about regional banks are sitting on $620 billion in unrealized losses. That's more than twice the losses that triggered the 2008 financial crisis. Silicon Valley Bank was just the beginning. When interest rates rose, bond values collapsed. Banks that loaded up on safe government bonds during the pandemic are now technically insolvent. They're only staying alive because depositors haven't figured it out yet. Remember I mentioned a country making a shocking move? It's Germany. The economic powerhouse of Europe just announced they're reducing dollar reserves by 15% and increasing gold holdings. When Germany loses faith in the dollar, you know we're in trouble. But here's what's really going to blow your mind. There's one investment that Dalio is quietly accumulating that could protect you from everything I just described. And it's not what most financial advisors are recommending. Point 6, the real estate ripple effect. As the dollar weakens, foreign investment in U.S. real estate is collapsing. Chinese buyers who propped up luxury markets from New York to California have virtually disappeared. Sales to foreign buyers dropped 36% last year alone. If you own a home, this affects you directly. Fewer buyers means lower prices. Your biggest asset could lose 20–30% of its value as international demand evaporates. Point 7. The stock market Mirage Wall Street keeps hitting new highs, but it's built on quicksand. Corporate earnings are inflated by cheap debt that's about to get very expensive. When the dollar crisis hits full force, earnings will collapse faster than you can say margin call. This reminds me of 1971, when President Nixon ended the gold standard. The dollar fell 40% over the next decade. Gold went from $35 an ounce to $850. Those who saw it coming made fortunes. Those who didn't, well, they learned the hard way. Point 8. The timing factor. Dalio's models suggest we have 18–24 months before the crisis reaches critical mass. That sounds like a lot of time, but financial collapses happen slowly, then all at once. Look at this timeline of the 2008 crisis. Problems started brewing in 2006, became obvious in 2007, and exploded in 2008. We're somewhere between 2006 and 2007 right now. But unlike 2008, when most people got blindsided, you have advance warning. And there's one specific strategy that billionaires are using to not just survive this crisis, but profit from it. Point 9. The commodities supercycle. As the dollar weakens, commodity prices are exploding. Oil, gold, silver, copper, wheat. Everything priced in dollars becomes more expensive for Americans, but cheaper for foreigners. This creates a vicious cycle. Higher commodity prices drive inflation, which weakens the dollar further, which drives commodity prices even higher. Your gas bill, grocery bill, and heating bill are about to go through the roof. But if you position yourself correctly, you can turn this crisis into opportunity. Point 10. The final warning. Ray Dalio recently said something that should terrify every American. We are at a tipping point where the dollar's role as the world's reserve currency is genuinely at risk for the first time since World War II. When that happens, it won't be gradual. It'll be sudden, violent, and devastating for anyone caught unprepared. So what's Dalio's secret weapon? What's he buying to protect his clients' wealth? It's not just gold, though he's accumulated massive positions. It's not just foreign currencies, though he's diversified into yen and euros. And it's not just commodities, though he's loaded up on energy and agricultural futures. Dalio's real strategy is what he calls beautiful deleveraging, a systematic approach to surviving currency collapse while most people panic. Here's his 3-step playbook. Step 1. Reduce dollar-denominated debt. Pay off credit cards, car loans, anything with variable interest rates. As the dollar weakens and inflation rises, these become wealth destroyers. Step 2. Diversify into real assets. This means physical gold, silver, real estate in strategic locations, and shares of companies that own hard assets. mines, oil wells, farmland. Step 3. Generate foreign income. Whether through international stocks, foreign real estate, or businesses with overseas revenue, you need income streams not dependent on a weakening dollar. The window to implement this strategy is closing fast. Every month you wait, more assets become overpriced and harder to acquire. Remember when I told you this wasn't about boring economics? That's because this is about your financial survival. The dollar crisis isn't coming. It's here. The only question is whether you'll be prepared. The smartest money managers in the world, Dalio, Stanley Druckenmiller, Paul Tudor Jones, are all preparing for dollar devaluation. They're not waiting for official announcements or government warnings. They're acting now. Think about your retirement account, your savings, your kids' college fund. How much of that wealth will still be there when the dollar loses its reserve currency status? The families who preserve their wealth through currency crises aren't lucky. They're prepared. They see the warning signs and take action while everyone else debates whether it's really happening. Here's what you need to do right now. First, hit that like button if this opened your eyes to what's really happening. Second, subscribe and ring the notification bell because I'll be tracking every development in this crisis. Third, drop a comment and tell me, are you preparing for dollar weakness or are you hoping it won't happen? Your answer might determine your financial future. And if you think this dollar crisis is shocking, wait until you see what's happening to the banking system. My next video reveals why 3 major banks are quietly preparing for collapse. And it's not the ones you'd expect. Click here to watch it now before it's too late. The dollar's 80-year reign as king of currencies is ending. The question isn't if, it's when. And whether you'll be on the right side of history when it happens. Thanks for watching FinSight Capital, where we reveal the financial truths that could save your wealth. Remember, in a world of financial deception, the truth is your most valuable asset.